Okay guys, GK the Trader here. This video here obviously is going to be a little different, but it's for a good reason. I'm going to have lots of very rich information here and just overall probably the most important video I'm going to put out. So obviously as you can see here, I'm going to be going over my personal A+ trade setup, 8 specific key elements that all make up my A+ trade setup. And before I get started here, keep in mind that I'm going to be transposing everything that I'm talking about here to the charts, and I'm going to be showing my executions, of course, as always. So anyways, let's get right into it. Number one, most important, number one for a reason, higher time frame key level. Every high probability trade needs some type of higher time frame key level to be keying off of to take an intraday trade. So I'll be starting on the weekly time frame, and that'll be the weekly candle projection, which comes first before anything. So using premium and discount arrays such as order blocks and inefficiencies, and looking at that weekly candle projection before the week even starts, and ask yourself, are we more likely to trade higher above a high with buy stops, or are we likely to trade lower into a low with sell stops or an inefficiency below market price? So very important. And then from there, we're going to go down to the daily time frame, and you're marking out all of your key levels on that daily time frame to key off trades on the lower time frames intraday. So higher time frame key level, very important. Number two, market structure, also very important. Short-term highs, intermittent term highs, long-term highs, short-term lows, intermittent term lows, long-term lows, all of that I'm marking and mapping out, starting from the 1 hour time frame all the way down to the 5, pointing. So with the help of market structure, you can see where the market's tipping its hand is going lower or higher. So I'll get more into this into the charts, but moving on, number three, the PD array matrix. And keep in mind that the PD array matrix is universal. And what does that mean? That means it's applied to every single time frame. You use this on every time frame. How the markets move from premium to discount arrays intraday, algorithmically. There we go. Said it right. But yeah, I'll get more into this into the charts. It's a harder thing to just explain without a chart. But liquidity. Is there buy stops that have yet to be taken? If yes, then we could be possibly looking at a bullish market. Is there sell stops yet to be taken? If the answer is yes, then we may be looking at bearishness. It's very important to be able to identify the next draw on liquidity. Who's been making money? Who's the next likely prey in price? Number 5, displacement. Ideally, displacement off of a higher time frame key level. So just take 1 through 4 here, mix that all together, and then after that, once you get your displacement, then you have yourself a trade. Displacement, those displacement legs that occur off of premium discount arrays, that's where I'm entering in. So if we displace lower and then retrace into an order block, that's where I'm going to be entering. Now, don't get displacement and Judah swings mixed up, because they're completely different things, and if you don't know the difference between them, you could hurt your account. So I'll get more into that into the charts, obviously. So number 6, take 1 through 5 here. Once again, take 1 through 5 elements here, and then you incorporate time. Time is the glue to price. This is what meshes everything together to have that A+ trade setup. Without time, I don't have an A+ trade setup. Without this right here, there's no setup. So honestly, if you have 1 through 6 here, you have yourself an A+ trade setup. 7 and 8 here is what just amplifies this. So let's 1 through 6, you have yourself an A+ trade setup, okay? But then if you have 7 and 8 on your side, you now have an A+ trade setup on steroids. And yeah, this is going to be the 8 key elements that make up my A+ trade setup. And without further ado, let's get into the charts. And all right, guys, now on the charts here. Starting off with number one. And actually, before I get started, I'm actually just going to go into the lower time frames real quick, just to put on my executions right away, just so we let you know that this isn't a hindsight teaching. Everything was real time on my private live stream. Now, this looks like a small trade in hindsight, but really it was over 20 handles, and I mean, that's very respectable returns intraday. I did have a little break-even trade here. I took an early short and got stopped out up here, so got a re-entry, 2 contracts, got covered both down here at around 23 handles. So now that we got that out of the way, let's get to the important part of the video. Number one, higher time frame key level. Which higher time frame key level did we trade into? Previous week's high. See how we swept that? That's our key level. But if you want to add in another one, it'll be this order block. So this order block right here. See how we see the precision around that opening price there. And then if we really just want to go above and beyond, I will bring your attention to this inversion fair value gap. We also traded up into that. I'm not going to have this on my chart though because I don't need it. So with that, let's go down to the hourly time frame right away. So we have previous week's high swept, and we have a daily order block traded into. So 2 higher time frame key levels that we traded to. So we got that established. Now we're going to go and mark out the market structure. So let's go down to the 15-minute time frame, and let's get out that opening price. And above opening price, you can see that we made the intermittent term high. So intermittent term high, and then we have this swing high to the right of it, and then this swing high to the left of it. So intermittent term high above opening price. Because it's above opening price, that's a high probability intermittent term high that won't be traded above. So this would be our London high of the day. So then we return back above it, create another intermittent term high right here, above opening price. And then going down to the 5-minute time frame, you can see swing high. I'm actually going to go to market replay just because, so you can see things clearer, because there we go, that looks better. So swing high here, swing high to the left of it, swing high to the right of it. And number 3, so we have market structure mapped out. The PD array matrix. Now obviously I only got covered here at this discount imbalance. So we were at a premium, premium buy stops, and I was looking for us to trade down into discount imbalances here and here. I knew it was likely for it to trade down to here as well, but I just took what I can get and got covered within this inefficiency right here. So if we take our fib, you take this, we'll use this one because this is the main swing point. Take that, you see we're in a premium in this red zone up here. So premium is where I entered, and then exiting in a discount. Now, like I said in the beginning portion of this video, the PD array matrix is universal. So this is the opening range PD array matrix. If you want to go to the daily time frame, daily range, you can see this, we were in a deep premium here, and then down here would be discount, and obviously you saw we ran for that today. So we got that established there. Let's go to the 15-minute time frame. Number 5, displacement. After everything established here, we finally get our displacement below this swing low right here, which is also a mitigation block, this down close candle. And like I said, displacement legs is where I enter my trades. So we can see this 15-minute imbalance. I was seeing us trade up into that, but I didn't enter on the 15-minute time frame. I entered on the lower time frame so I could have better risk parameters. So let's go to the 5-minute time frame. If you take a look here, we have 3 drives pattern up into that 15-minute imbalance. So short-term stops being blown out as we're trading up into that 15-minute imbalance. And before I go any further, I'm going to add in a little bonus here. If we take yesterday's true day close, let me get this off here, and then today's true day opening, so this will make up new week opening gap. Look how we get below that new day opening gap, shift below it, and then we trade up into it, supporting it at the high end. Do you see that? See the precision on there? So new day opening gap, when we shifted below it and treated it as resistance, that was tipping its hand that it wants to go lower. So let's get that off. And I'm actually going to take this off as well. So I'm going to put this back here because... So there's that intermittent term high. A second intermittent term high over here above opening price. And then we get that displacement into that 15-minute gap. 3 drives higher in the 5-minute time frame. And here's where I entered. After we got that 3 drives per pattern, short-term high for blown out, and we supported price at that new day opening gap, we get displacement again below the short-term swing low, and then I entered right here. I guess executions can't be shown in market replay, but entered right here. Looks a lot different, so I'm going to go back to market replay actually, because anyways, you get the point. Entered right here in this imbalance that was formed on the second displacement leg in the 1-minute time frame. Entered there in the premium. As soon as it tapped the high of that 15-minute imbalance, we displaced below that, went into the 15-minute imbalance and the 1-minute imbalance. Boom, that's where I was going short, and then exiting at the midpoint of this discount imbalance. So premium to discounted rate matrix. Now, where does time of day play a role in all this? So some days you're going to have times where pre-market trades are the best ones. As you can see, this short right here was 9.26 right before the opening. How was I able to trust this short and not wait for the 9.50 macro or the 9.30 opening, which is the key time of days? Why didn't I wait for that? Because everything I just outlined here, the work was already done above opening price. Stops were blown out, displays here, created this intermittent term high, and then we repriced into the 15-minute imbalance. So all the work is already done ahead of the opening. So all the opening has to do is just displace lower, because all the heavy lifting has already been done pre-market. So whenever you see something like that, you can anticipate price to just plummet lower right at the opening. Now, daily profile. What's the daily profile today? London, high of the day, and then New York, expansion lower. That's the daily profile. So I was bearish today, and that means there's going to be a 70% chance that we make that London high of the day, and we got that, and it delivered beautifully. And then as for, I'm going to get out of replay mode real quick. Everything I outlined was good enough. That's everything I used for my short. Didn't really offer any high probability shorts to enter in for the rest of the day, just because you would have to risk like way too much. Your stop would have to be super wide. But anyways, let's go to that hourly time frame. We say we made this long-term low here Friday, and then Monday, Tuesday, and Wednesday all traded higher into that daily time frame PD array. So now I'm anticipating us to have that midweek decline, which would be Thursday we run out a high, and then we aggressively displace lower, and then Friday we continue lower, making the low of the week. So that would be the weekly profile here. So yeah, simple enough. If you want to learn more, you can go watch core content on the ICT YouTube channel. All 12 months, I believe. So yeah, I think that's it. One more little bonus thing I want to show here is yesterday we left this regular trading hour gap open, and you can see that was basically the terminus here for today. Once we got down there, we kind of just consolidated. So this was like the last discount array that was being targeted today. And then obviously we have all these sell stops trailed below here for those who are buying and getting excited on this higher price movement. So yeah, with that being said, I think that's going to be it here. Hope this was insightful. Hope it was clear. Nothing confusing. None of that. If it was insightful, helped you in any way, I would appreciate it if you hit that like button. Maybe you drop a comment if you're feeling nice. But yeah, that's going to do it here today, guys. And I'll see you tomorrow in the private live stream.